Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil. Here are the headlines. It's a positive start to the trading day with the Nifty within touching distance of 11,760. Its all-time high at all sectoral indices are trading with gains. And open interest surges in Jet Airways as traders take fresh short positions, whereas fresh long positions are building up in Ultratech Cement. SRF has fallen the most since September 2018 after the Gujarat Pollution Control Board ordered closure of its Dahej unit. And metal stocks are leading the gains on the index after China's manufacturing PMI improved in the previous month.
Okay, let's see what the markets are doing. 11,760 is where the Nifty is at this point of time. We're up almost 80 points on the Nifty. So there is clear positive traction that's happening on the Nifty. Pull up the Nifty Bank and see what exactly the Nifty Bank has managed to do, because counters like HDFC Bank, ICICI Bank again are trading at record highs. So there is enough positive traction that's seen on the Nifty Bank. It's up almost 0.5% on decent open interest build up. What we're seeing is that while 12,000 continues to be the big support level, resistance level for the market, put writers are aggressively writing in from the 11,500 mark right up to 11,700 mark in trade. So slowly and steadily the put writers are becoming much more aggressive. But even if that is said, call writers are still active from 11,700 to higher levels, indicating that the market will face a little bit of resistance as it moves on to the higher side. What is happening in today's trade? Pull up what's happened in today's trade. Again, put writers are active, and at 11,600 and 700, call writers are forced to shed positions in open interest since the market has opened a gap up. The only other thing that you need to watch out is the Nifty all-time high, whether the Nifty will hit record highs in trade today. 11,780, I believe, is the all-time high on the Nifty. The spot is still below that level, so we need to watch out what happens on that level. I believe the Sensex is already trading at record highs. That's the trend. Agam, what are you hearing?
That's right, Darshan. Well, besides the fact that we've seen some of these benchmarks now at record highs, and we're waiting for the Nifty to also move beyond that, let's talk about a certain stocks. And I'm sure there are a lot of stocks out there which are also on the verge of hitting their life highs. But to take a look at some of those stocks which are in the futures and options space, which are buzzing in trade, we have Jet Airways right at the top. Though on the losing end, Engineers India, Ultratech Cement, Kajaria Cement, among many others, which are also continuing to advance with a lot of longs building in. Early days in the April series, but there certainly is a lot of traction when it comes to your open interest. Bharat Electricals as well advancing in trade. There won't be too much in terms of unwinding, I reckon, considering the fact that it is early days in expiry. So if we can have some of those stocks which are possibly seeing some sort of decline in open interest, or maybe not. Okay, there you have it. Yes, Adani Enterprises, Siemens, and Ujjivan Financial among stocks which are looking at declines. But today is going to be all about your benchmark indices, with the Sensex now at lifetime highs. It moves into uncharted territory, and waiting on the Nifty to follow through on that aspect.
So the market's at record high, Sensex already at record highs, and Nifty Bank doing well in trade, already at record high. So it's a matter of time before people want the Nifty 50 to be at record high. So that's the trend that we're seeing. But let's take a look at some of the stocks that we want to address. Now, there are two packs which have done extremely well. The first one is the cement pack. After Bank of America Merrill Lynch came out with a note indicating that from April 1st, pan-India price hike across all the states, individually some of the states and counters like ACC trading at record highs. India Cements has done well. So we'll talk about the cement pack in trade. The other one The other stocks that we want to talk about is the metal pack. Given the strong China PMI number, most of the metal counters, be it a Vedanta or be it a JSPL or a JSW Steel, all of them have managed to move up higher in trade. The other counter we want to talk about is Syndicate Bank, which has managed to move up. SRF has fallen on the Gujarat Pollution Board issue that was happened. ICICI Bank at record highs. Page Industries, Motherson Sumi, TVS Motors, Tata Motors, all of them are higher in trade. But before we get our guest on the show, here's a reminder: if you have any queries regarding the futures and option market, you can call us on 02245404141 or write to us on Twitter, Facebook with the Ask BQ hashtag. But before we get in the guest, Neeraj is here. Neeraj, record highs on the Sensex. Yeah, Sensex at record high, Nifty Bank at record high. But the Nifty is still, I believe, 100 or less than 100 points away from record highs. But needless to say, when we're cheering the markets going up, I think mid cap, small caps haven't participated. So a lot of stocks still are much lower than what they were.
Yeah, and I'm sure you guys will get phoners as well. But I just thought we should do a small piece around this as well, right? I don't think 3 weeks before, when the cross-border tensions were so evident, people would have thought that in such a short span of time we'll hit record highs. Part reason, of course, what's happened to FI flows, and it's been quite exemplary as to the kind of money that's come in. I think Yash was telling me these are record flows since NSDL started recording data. So that's one thing. But just to the sheer disdain with which banks have moved up and carried the indices along with them is quite exceptional. We haven't seen such a move in a really long time, such a sharp move in a really long time, and it's quite exceptional. Long build up, FI flows coming in, earnings season still not started and we're still doing well, and the monetary policy coming up, auto sales starting to trickle in as well. The market is just moving up, ignoring almost everything else.
It's doing well. I think what we've noticed is the cement stocks have done extremely well, price hikes coming in. So off late, cement stocks have managed to bounce back. You've seen that. And the other thing is that a couple of quality stocks have done well. Look at Bajaj Finance, which has moved to record highs. But let's get a sense of, I believe Ajay Srivastav of Dimension is joining us on the phone line. Good morning, Ajay. What's the sense that you're getting in? Markets, Sensex at record high, Nifty Bank at record highs. But overall, what's the sense that you're getting? Will the pain in the mid cap and small cap end of the market continue, or are they also poised to grow in higher?
Well, let's enjoy the rally. But I think that gradually there will be some activity on the mid cap side, and I think that will be minimal activity because the case is not convincing for them because FIs are not buying those stocks. So it's all about demand supply. If you look at the genesis of this rise, a good quantum dollop of money which came in thanks to what happened in the U.S. Federal Reserve encountered a situation where there was no selling happening in the Indian market. Indian selling was over last year. So we were not selling any majorly in the Indian market. The foreigners wanted to buy the stock. The price action was very clear, demand supply. Quite simple. Don't think it will happen to mid-cap. And when it happens to mid-cap, that will be a clear sign that we'll be topping out of this rally also, because that's just when the C-class category participates against economic fundamentals, which tells you the story that now is the time to pay your investments or hold off your money.
Right, Ajay, to what extent do you attribute this rally in your major indices like the Sensex and the Nifty to more to do with sentiment than fundamentals?
Well, there is nothing called fundamental. Fundamental have not changed. Our GDP was the lowest in the quarter at 6.6% and thereabouts. So nothing changing fundamental, but the bottom line is the discounting denominator changed and the huge amount of liquidity which got released in the global market has to find natural allocation to all world major markets. At the end of the day, that's how the world equity funds work, ETF work, that you have a precise allocation to every geographical country in the world. India is a large one, of course, in the allocation bucket. So when this reversal happened in the Federal Reserve and the money came their way, it is a natural allocation process. There is no change in economic fundamental. In fact, it's weaker than what it was, but the denominator got changed. The discounting factor got changed, and which told the investors the time to load up these stocks is now, because our discounting factor, which we are factoring interest rate increase, is going to be interest rate reduction. So load up the risk assets, including the emerging markets assets. Nothing to do with economic fundamental. It's pure demand, supply, and cash flow, and the discounting factor of the returns.
Ajay, what are you telling your clients at this point of time? Focus on quality, large caps, go in for the mid cap end of the market, or go in for the small cap end of the market. What's the sense that you have advised your clients?
See, very simple. We are doing three things. One is hold off to all your large cap portfolios. Don't need to book profits. Just stay put. You may see a correction in large cap, but that's okay. Eventually, as the economy is reflecting, what is the economy telling you? Economy is telling you that large companies will survive and thrive in the new setup. The smaller and the medium scale will gradually wither away. Now, that logic should follow to your portfolio as well. That small and smaller companies, 100 crore, 250 crore, 300 crore kind of companies, should not be part of any portfolio because you're playing with the gambling, which is 1 out of 50 may succeed, but those losses and few of the one you're holding could wipe you out. So stick to the large cap. Stick banking has always been, you and I have been discussing for last so many years, that India is the place to be in banking. There is no other place that you want to be, put your portfolio there. And also, if you really were looking for generating extra returns, look at something in real estate, look at something in metal space, very cheap, and we keep recommending PSU stock for the fantastic dividend yields. So I think these three spaces, we are good. Rest of the mid-cap, whether it's auto ancillaries, whether it is this thing, we are saying just stay clear of it because that's not going to be the place where you're going to make a superior return compared to the mainline stocks.
Okay, just one more question, Ajay. You did suggest that you would advise investors to stay put, stay with the large caps. But when it comes to sectors, perhaps are there any areas which are at extremely heady levels, which may be most susceptible? Or should we see some volatility in the near term as we approach the elections?
If you look at the two main sectors where people are putting the money is banking and FMCG, the consumer space. By and large, it's also a question, as I said, it's not about economic fundamentals, demand, supply. Nobody's selling. These are all people now, the HNIs, whether a high net worth investor institution are holding for the long term. So supply of paper is very limited across the spectrum in the market. Hardly any capital issues take place in this sector. So FMCG and the banking space, absolutely kosher. Same is true of IT space. IT will see a wobble, may see a wobble because of exchange rate. But IT, again, no major capital issue. Consolidation play is happening there. So these three sectors are very comfortable. The larger caps in infrastructure, etc., if there are anything larger caps, I think that's the problem area. But these three sectors can wobble any point of time. You saw the market last April or March was the high. Then we traveled back all the way. It took us 1 year to come back to the same level. So it's hard knocks for the investors who are sitting with 1 year with zero return. But that's the reality of the market. So I think these three sectors, stay put, rest everything, give up because I don't know where the economy is going. I know for certain where incremental paper is not going to come to the market is these three sectors.
All right, Ajay, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets on the event of the Sensex and the Nifty Bank trading at new life highs. Well, non-uncharted territory, and we will continue to wait on perhaps the Nifty to follow through as well. But on that note, let's also welcome in our F&O experts for the day. We have Navneet, Daga and of Yes Securities and Abhijit Phatak of Definedge Solutions joining us on the show. Good morning and thank you so much for joining us. Abhijit, I'll come to you. First, your view on how you would tackle the indices and perhaps some levels that you'd watch out for.
Yeah, Nifty is bullish, there is no doubt about it, and there is no question of even going short in this. But there are people who might be scared holding it, so maybe you can hedge it with a maybe 11,600 put buy. But the trade is to remain long and even go long on dips, and as long as Nifty remains above 11,550, 11,600, it can go towards lifetime highs. In fact, I'm expecting more than that, maybe even 12,000, maybe this expiry.
Okay, that's the sense that Abhijit is getting. Navneet, what's the sense that you're getting in? What are you telling your clients to do?
Hi, good morning. Look, the overall setup is definitely, we're in a kind of an upswing. We have seen global markets also rallying. We have seen FI participation in terms of derivative build-up as well as on the cash side has been quite strong. The data and the stats suggest that there is much more room on the upside. But however, since we have been kind of almost 1,000 point of an upswing without any giving any meaningful retracements as well. So one need to be very carefully while by choosing which stocks to get into. However, I believe that somewhat the momentum is likely to now likely to see a two-way kind of a movement rather than one-way the kind of a move that we are seeing. Somewhere near to that lifetime high levels on the Nifty, 11,760 odd levels. That's where we likely to see some kind of a profit booking also started to kick in and two-way movement started to happen. So we are also going into the monetary policy event next week, in fact this week itself. So there would be a kind of a two-way volatility, so one need to be a bit cautious as well as overall trading suggests that somewhat now the consolidation of the gains are likely to happen rather than being chasing on the one side. So I'll be playing for a consolidation in the market at this point of time.
Okay, that's the sense that you got in. But Navneet, what's the strategy that you want are you giving out for investors today?
Well, look, we have been quite bullish on overall the way the PSU banking setups and the Bank Nifty setup was, and been recommending being on the long side. But now it's looking likely that if I look at the daily chart reading on the Bank Nifty as well as some of the stocks, they are trading at much above their higher end of the 2 sigma standard deviation levels. So to my understanding, there's a chances that this kind of an up move might see a kind of a consolidation, and my having the similar view. What I'm suggesting is basically, since the walls have been quite high and it's likely to remain elevated since we are into that news flow driven market, and so the chances that we might see a consolidation. On the lower end on the Bank Nifty, see a lot of support now developing at a level of somewhere into 30,000 odd levels. So one can create a short strangle strategy for the weekly expiry, that is for the 4th of April. One can go short on 30,000 put options on the weekly side, as well as selling an upper strike almost 700 points of OTMs on the call side, 31,500. We're getting an inflow somewhere in the range of 120 odd points. One can create the strategy, keep a strict stop loss, or the spreads widens towards 200 odd levels. That's where a lot of volatility would be seen. And on the lower side, we are expecting the market to grind down between these two levels and expecting the target of almost 10 points on this strategy.
Okay, just to highlight, a short strangle is when one sells an out of the money call and out of the money put in anticipation of decrease in volatility. The strategy becomes profitable when volatility decreases, followed by a contraction in option premium. Before we get in the strategies, pull up Maruti Suzuki. They've come out with their auto sales number. 1,58,000 units have been sold. The estimate was 1,61,000 units. The counter actually has reacted positively. It's a miss by 3,000 units, but nevertheless, Maruti Suzuki has managed to move in much higher in today's trade.
Okay, well, on that note, let's also take in our experts and the stocks they are recommending. So, Navneet, let me come back to you on the stocks that you are looking at.
Look, my stocks would be a kind of a mix of a momentum trade as well as some kind of a bottom fishing. The first trade is a kind of a momentum trade whereby we have seen a lot of upside breakout on most of the cement counters. Ultratech being a heavyweight and bellwether in that particular sector. I believe that somewhere near to that 3,950 to 4,000 was a kind of a big consolidation level. It has broken out. The previous swing high was somewhere in the 4,150 odd levels. It has broken near to that level. To my understanding, the momentum likely to continue. We have seen a big build-up happening in today's session, and the price breakout also suggests that the chances are of an upside level, the somewhere near to 4,350 odd levels is possible. So to my understanding, one can still initiate the long trade in this and be on the long side. My stop loss would be 3,980 and looking for an upside target of 4,350 on Ultratech. The second stock would be a kind of a sector which is kind of a bit of a laggard and seeing some kind of a consolidation. Overall, it's looking likely that the auto sector is seeing some kind of a price bottoming out formation. I'm looking at a Hero MotoCorp, which has seen a good correction and seen a consolidation in the levels of 2,500 odd levels. The stock is not able to breach below that level. So it's a risk rewards are quite favorable to be taken a contra bet and be on the long side. Place a small stop loss of 25.50 on the lower side on April futures. One can still look to be on the buy side with an upside target of 27.40.
Okay, those are the two stocks that Navneet has spoken about. Cement obviously in focus, and Hero will be in focus ahead of the auto sales numbers probably that will come out today or tomorrow. Abhijit, which are the stocks that you would want to talk about, and believe both of them are still on the bullish side?
Yeah, both longs. One is UPL, which can be bought above the today's high, which is 964, but one can even try now, and as long as the stop loss is maintained below 953 on the futures, and this can go towards 985 or even 1000. And Vedanta also is near the day's high, and above 194 it can be bought with the stop loss below the day's low, and this can go towards 200 or maybe even 205.
Okay, well, two sectors that we want to address today. One of them is a metal pack. And again, we've seen some changes with respect to the underlying fundamentals on account of change in commodity prices. But we're not here to track commodity prices. We're here to track how metal stocks are doing. So, well, on the whole, we have seen a lot of movement in the metal stocks. And again, we'd like to take stock of how our analysts are viewing some of these counters moving in. So, Abhijit, if I can come back to you on the metal pack itself, anything that stands out for you?
Gave Vedanta just now. Even Tata Steel, there's a small resistance near 540, 545, but once that is cleared, it can go towards 570. In fact, all the metal stocks are looking extremely bullish, and any dip is a buy in them.
Okay, the other pack that looks very, very interesting is the cement pack. Navneet, you already spoke about Ultratech. Are there any other cement stocks that are looking attractive to you at this point of time? I believe ACC is trading at a 52-week high. India Cements, Ramco, all of them have reacted positively to the BOFA note that came in terms of a price hike that could be potentially up there for today. What's the sense that you're getting in? Apart from Ultratech, which are the other cement stocks that look good?
Look, to my understanding, so the mid-cap ones in the likes of India Cement, they are seeing to be a good amount of traction, and that's where a lot of traders' activity is visible. So to my understanding, if somebody has got kind of a higher risk appetite, one can still look to be chasing on that stock, India Cement, with a small on the small retracement stop loss of somewhere near to 112 odd levels. To my understanding, there's a great chances that it might move towards a level of 125 odd. So apart from that, overall on the large cap side, ACC looks to be a kind of a bit stretched to me. The chances of it might stall down or go into that kind of a price consolidation, much more chances. But there's a chances that Ultratech and the mid cap ones likes of India Cement can give you still a returns from here on as well.
All right, let's move on and talk about a handful of banks. Perhaps one bank that we can address is something like an ICICI bank, because that one is also moving from strength to strength. And we've been talking about this one for some time now. Again, given the fact that there has been so much traction in a whole host of these banks, ICICI Bank stands out. There's unwinding in this one, surprisingly. It's up as much as 1.7%. Abhijit, anything for ICICI Bank, and if not ICICI Bank, any other bank that is coming on your radar today?
Actually, everything is still bullish. Only one bank which has a resistance is the Yes Bank, which is near the 200 DMA. So, I mean, if 275, 280 is the resistance, so that is the only place where I can think of any short. But then otherwise, even ICICI Bank, again, because of the credit policy in the next couple of days, there might be some profit booking, but then that, again, I believe that should be used to go long.
Okay, the other stocks we want to talk about, I think pull up Tata Motors, and today autos, apart from cement and this thing, and metal is doing well. Tata Motors has moved up 6% in today's trade. Abhijit, would you venture a buy in Tata Motors?
Tata Motors also is a buy on dip as long as it is above 180 futures. So right now the stop loss is a bit wide, but it can go towards 192, 197, and above 200 it can go towards 220 also.
Okay, the other stock we want to talk about is SRF. Managed to fall down in trade yesterday, was down 4% on Friday, then intraday, and now again it's managed to recover significantly from the lows of the day in terms of news coming in as far as the Dahej plant being asked to shut down. What does this look on the F&O side to you, Navneet?
Well, it's been a lot of news flow driven activity which has been visible. It's been quite volatile off late over the place, but overall the setup suggests that the dips are getting bought into, and the stock was one of the few mid cap stock which was forming a new 52-week high, and a kind of a strength that it has seen. To my understanding, I'll not venture into it at this point of time. I'd look for a closing about somewhere near 2450 odd levels on the futures. If it started to maintain about that level, then it makes sense to be again try to be on the long side on the stock. But however, that area, the critical area of 2450 to 2500 seems to be kind of an impending resistance on the stock. So I'll wait for that levels to be crossing. However, not look for if somebody is looking for a contra trade on the short side, keep a stop loss of 2450 odd on the closing basis to be on the sell side. It can give you kind of a surprise downside move as well.
Okay, guys, on that note, we've run out of time on the show, so I'm going to take a moment to thank both our experts, Abhijit and Navneet, for taking us through their views on the markets. For more updates on the F&O space, you can also check out our website at bloombergquint.com. That's a wrap on this edition of the F&O Show, but on the other side, we get you a lot more updates on the auto sales coming through. Stay tuned to Bloomberg Quint. We'll keep getting you more.